These are the most effective penny stock strategies that I have found in today's market. What's up team, John from Beginner Trading here, and if you haven't been watching the stream lately, I've been trading a ton of penny stocks. With that, I've been backtesting different strategies and methods, and so make sure to subscribe because in this video, we're delving deep into the penny stock strategies that are actually working in today's market. I went all the way back to the beginning of June and started to check to see how many times these strategies actually worked out and how many times they failed. Then when I had enough data to look at the best strategies in that list, I went ahead and included those in this video. Remember, some of the conditions I test are going to be subjective and vary person to person, different preferences, and so forth and so on. And so make sure you understand that moving forward. Before we look at the different strategies here, make sure you hit the like button, click the subscribe below, and let's take a look at the different strategies. The first one on my list today is the washout long or red to green setup. The washout long or red to green move generally happens when a stock drops in the first 5 minutes. You're looking for weakness, you want to see 1 to 5 red candles before a quick reversal back up, and your goal is to enter as soon as it breaks that previous high of the day. An easy way to remember this strategy is just to look for a U-shaped breakout. You want the stock to kind of form a U right after the open before reversing and breaking that previous high of the day, and that's where you enter this position. Once that happens, depending on the range of the stock, you can usually try to get at least 10 to 15 cents in profit for your reward target and give yourself maybe a 1-to-1 reward to risk ratio, or judge it based off of previous support or resistance or that previous high of the day level. The drop at the open can be as small as one candle all the way up to many, and they're all pretty effective. With that, I have found this to be one of the most accurate setups in penny stocks, and so let's take a look at the history of this strategy in penny stock land in the last 3 weeks. Okay, so when I first got started testing these specific strategies, what I did was I went all the way back to the beginning of June and I looked at the top 4 stocks on my gappers list every single morning. With that, one of the common necessities for this strategy to present itself is gapping stocks with high relative volume. And so you do want to understand that here, that we need the stock to gap up in particular in order for it to pull the red to green or washout long and get these results. Okay, so June 1st had a ton of successful washout longs, and what we're doing in this testing session is we're going back and we're looking at how many times the strategy or setup actually succeeded versus how many times it failed. And so if it succeeds, we tally that up versus how many times it fails, and then at the end we get an accuracy rate or a success rate with this. This is a type of easily done backtesting methods where you can really check to see how viable certain strategies are. And so the 4 stocks I took a look at on June 1st were CETX, DGLY, GNUS, and AESE. These were just the higher volume stocks on June 1st, and again we could take a look at all the successful examples. The first one I really want you to take a look at is DGLY. This is a picture-perfect washout long setup, and you can see it dropped originally at the open, forming that U-shaped breakout pattern before pushing up and breaking the previous high of the day and breaking out on the upside. This is definitely a really nice, self-evident, successful washout long setup, and this is exactly what we're actually looking for. You can see for that specific day on DGLY, we had a really nice high volume gap up that brought attention to this stock for this setup at the open, and that's really one of the indicators that can tell us the strategy might present itself. You can also look at AESE, and this one was a much smaller example, but you can even see the small U-shaped pattern. It had that first red candle at the open, then reversed, broke the previous high of the day, and broke out really nicely on the upside. Again, just like the last one, this one had high relative volume and a really nice gap to bring attention to it, and so I hope you understand that's what you specifically look for in these type of situations. Also showing up on June 1st, we had CETX, which was a much longer term example of it, but again, you could see the U-shaped breakout pattern at the open. It dropped down originally before reversing, breaking the previous high of the day and pushing up at least 10 to 15 cents. If this one would have immediately rejected at that previous high of the day break and faked us out, I could count this as a negative, but this one was successful as well, even though a much longer term example. And then the last one I want you guys to take a look at is GNUS. This one formed one of my favorite examples of it, and you can see the really tight downward trending range that formed at the open. You can see multiple red candles before again the U-shaped breakout pattern pushing up, breaking the previous high of the day, and shooting up, picking up volume for a really nice breakout. With that said, I didn't see any failures of this specific strategy on June 1st, and we had multiple successes overall. So I continued to test this strategy all the way up to June 19th. If it worked, I would give it a mark in the success category, and if it failed, I would give it a mark in the failure category. In the end, I added all of those up to give me an accuracy or success rate percentage, and so there was 60 total instances of this strategy during that 15-day period. 48 of them were successful, with 12 of them being failures. That gave this one an 80% accuracy rate starting from June 1st all the way up to June 19th. But again, this is going to vary depending on who tests it, because everyone's going to have a different definition and preference on what you may consider a success and what you may consider a failure. And so these results are going to be somewhat subjective to my style of trading, and you want to make sure you do this on your own. But the point still remains that that's a pretty solid accuracy rate for the washout long or red to green move. With it, that kind of goes with what I was learning as I was trading penny stocks this past week, because I did trade this strategy on my real account multiple times last week, and most of the time it was successful. Again, no trading strategy or pattern always works, but I think this one has proven us to be a very useful strategy and a really easy one to understand, especially for new traders just getting started. Again, one of the most useful things you can take from backtesting stocks like this is the favorable conditions, and in this case you want to look for high relative volume gap ups. That's a super important aspect of these type of strategies, is you need volume and liquidity. The less liquidity, usually the worse it ends up following through, and so you want to make sure you have the patience to wait for the A+ setups in this instance and let that good accuracy rate take care of you. The next one on my list today is the VWAP bounce setup, and I know I might sound like a broken record, but this is honestly a super profitable strategy if you learn how to trade it correctly. Now, if you know me, you know I'm mostly a mid and high cap trader using VWAP and a few different other indicators. I used to think that you couldn't really trade penny stocks using the VWAP, but after researching and analyzing with testing some, I've actually learned that the VWAP can be quite effective if you trade the right strategy. If you know me, one of my favorite strategies to trade in general is the VWAP bounce setup, and after researching different parabolic moves in penny stock land, I've actually found that that could be an effective strategy to attack on these stocks as well. Just to give you a quick rundown in this specific strategy as well, this is what I call the VWAP bounce, and I've gone over it a lot of different times on my channel. Still, the difference between those old videos on the VWAP bounce and this specific video is that in this one I'm going over how you trade penny stocks using the VWAP bounce strategy. So you're looking for a stock to kind of pull that same red to green washout long move at the open that I talked about in the previous section, but in this case you're looking for the stock to push above the VWAP, pull back to it, which is where you're ultimately going to enter. Once you enter around the VWAP, try to give yourself a tight risk underneath it, usually looking for a confirmed support or resistance level, and you're just trying to catch the bounce off of that VWAP level up closer to the previous high of the day. When you get that bounce, you want to take profits fast with penny stocks because honestly they're pretty unpredictable, but if you treat it like a scalp and you only try to get the meat of the move and not the entire move, it can be a very profitable, highly accurate setup as well. When I tested this one specifically on penny stocks, it had a little bit lower accuracy than the previous strategy. This one only had about 63%, but that's honestly still a pretty accurate setup, and you can use the long game to let that add up over time and slowly grow your small day trading account. Anyways guys, that's it for this one. Remember, if you want more free, completely free day trading content, make sure you hit the subscribe button and click the bell. It'll turn on notifications and you'll get an alert every time we go live. We also day trade live on stream where we trade penny stocks, mid and high cap stocks on TEFs, Robinhood, Webull, TD Ameritrade. We trade everywhere. And so if you want to watch that, make sure you hit the subscribe button. Good luck in the markets, guys. We'll see you guys next time. Remember to protect your day trading account, and remember, day trading and trading in general carries with it a ton of risk. Protect your account. Good luck in the markets, and we'll see you guys next time. Have a good day, team.